Today we will start with a new video called Analysis of Profit and Loss Statement. The profit and loss statement is also popularly referred to as the P&L statement, income statement, statement of operations, and statement of earnings. The profit and loss statement shows what has transpired during a time period. The P&L statement reports information on the revenue of the company for the given period. It could be yearly or quarterly. The expenses incurred to generate the revenues. Tax and depreciation. The earnings per share number. From my experience, the financial statements are best understood by looking at the actual statement and figuring out the information. Hence, here is the P&L statement of Amma Raja Batteries Limited. Let us understand each and every line item. The top line of the company, revenue. You may have heard analysts talk about the top line of a company. When they do so, they are referring to the revenue side of P&L statement. The revenue side is the first set of numbers the company presents in the P&L. Before we start understanding the revenue side, let us notice a few things mentioned on the header of the P&L statement. The header clearly states the statement of P&L for the year ending March 31st, 2014. Hence, this is an annual statement and not a quarterly statement. Also, since it is as of March 31st, 2014, it is evident that statement is for the financial year 2013-2014. Or simply it can be referred to as the financial year 14 numbers. All currency is denominated in rupees million. Note, 1 million rupees is equal to 10 lakh rupees. It is up to the company's discretion to decide which unit they would prefer to express their numbers in. The particular shows all the main headings of the statement. Any associated note to the particulars is present in the note section, also called schedule. An associate number is assigned to the note, that is note number. By default, when companies report the numbers in the financial statement, they present a current year number on the leftmost column and the previous number to the right. In this case, the numbers are for FY14 and FY13. The first line item on the revenue side is called the sale of products. Since we know we are dealing with batteries company, clearly sale of product means the rupees value of all battery sales the company has sold during FY14. The sale stands at 3,804 crore rupees. The company sold batteries worth rupees 3,294 crores in the previous financial year, that is financial year 13. Please note, I will restate all the numbers in rupees crore as I believe this is more intuitive to understand. The next line item is excise duty. This is the amount rupees 400 crores the company would pay to the government, hence the revenue has to be adjusted. The revenue adjusted after the excise duty is the net sale of the company. The net sales of ARBL is 3,403 crore rupees for financial year 14. The same was 2,914 crores for financial year 13. Apart from the sale of products, the company also draws revenue from the services. This could probably be in the form of annual battery maintenance. The revenue from sale of service stands at 30.9 crore rupees for financial year 14. The company also includes other operating revenues at rupees 2.1 crore. This could be revenues to the sales of products or services that is incidental to the core operations of the company. Finally, the revenue from sale of products plus sale of services plus other operating revenues sums up to give the total operating revenue of the company. This reported at 3,436 crore rupees for financial year 14 and rupees 2,959 crore rupees for financial year 13. Interesting. There is a note number 17 associated with net revenue from operations, which will help us inspect this aspect further. Do recall, in the previous video, we had discussed about notes and schedules of the financial statement. The following snapshot gives the details of note 17. Clearly, the notes give a more detailed analysis of the split up of revenues from operations. As you can see under the particulars section, talks about the split up under sales of products. Sale of storage batteries in the form of finished goods for the year financial year 14 is 3,523 crores versus 3,036 crores in financial year 13. Sale of storage batteries is rupees 208 crores in FY14 versus 149 crores in FY13. Stock in trade refers to the finished goods of previous financial year being sold in this financial year. Sale of home UPS is at Rs 71 crores in FY14 versus 109 crores FY13. Net sales from sales of product adjusted for excise duty amounts to Rs 3,403 crores, which matches with the number reported in the P&L statement. Likewise, you can notice the split up from revenue to services. The revenue number of 30.9 tallies with the number reported in the P&L statement. If in the note, the company says the sale of processed scrap generated revenue of Rs 2.1 crore. Note that the sale of processed scrap is incidental to operations of the company, hence reported as other operating revenues. Adding up all the revenue streams of the company, that is 3403 crores plus 30.9 crores plus 2.1 crores, gets us the net revenue from operations 3436 crores. You can also find similar split up for financial 13. If you notice the P&L statement, apart from net revenue, the operations ARBL also reports other income of 40.5 crores. Note number 18, reproduced below, explains what the other income is all about. As we can see, the other income includes income that is not related to the main business of the company. It includes interest on bank deposits, dividends, insurance claims, royalty income, etc. Usually, the other income forms a small portion of the total income. A large other income usually draws a red flag, and it would demand a further investigation. So, adding up revenues from operations and other income, we have the total revenue of for financial year 14 at 3,482 crore rupees. We will look at the expense side of the profit and loss statement in the next video. Thank you for watching this video. Please do like, comment, share and subscribe to my YouTube channel.